The numbers for February are in and there are some exciting things to share. In this update I will share the start of several new positions and the increase in the number of shares in one of my existing positions. On top of that, you'll see how my dividends this month are worth enough to buy a full share and how much my portfolio has changed since last month. So let's go. Last month I bought more shares of stored capital, but what did I end up buying this month? First I will share my portfolio and I will highlight different stocks that are worth noting for the month. So this is my full portfolio broken down by approximate weight. REITs make up the biggest portion of my portfolio right now, about 25%. That is definitely not the composition I want to keep long term. I don't mind being heavy in REITs, but two of those positions bear some risk: Omega Healthcare Investors and Tensure Factory Outlets. In a bit I will explain how I plan to bring the weight of the REIT portion down. It won't be by selling any of the current REIT positions, I can tell you that. 5 other sectors are all above 10% of my portfolio, with consumer staples sector being the largest, completely due to my position in CVS Health. The IT sector and the financial sector each grew above 10% because those sectors hold 2 of my largest gainers. On the other hand, I'm underweight in the healthcare and utility sector. I do plan to increase those sectors in the coming months, so keep an eye out on that. And in some other sectors, such as energy and materials, I don't have any positions at all. If you watched my video on 5 undervalued dividend stocks in episode 51, then you might have noticed that 3 out of the 5 stocks mentioned there are from or related to the healthcare sector. If you haven't watched it yet, click on the suggested video in the top right. Which stocks stood out in February? One stock keeps appearing in the highlighted stock section because it keeps moving up. That stock is Tensure Factory Outlets. Just half a year ago I was down over 60% on this stock, and now it is almost within $1 of my cost basis. They also started paying out a dividend again. Comparing the rent collection statistics of the third and fourth quarter, we can see improvement there as well. Honestly, with SKT I have a bit of hindsight bias, because I remember clearly when it was around $5 to $6, and I thought to myself, this is a cheap price to get some more shares. But I didn't pull the trigger and talk myself out of it, due to too much risk and so on, blah blah blah. The other company I want to highlight is not because they increased a lot in share price or because they had a big increase in dividends, but because I think it is the largely misunderstood company, and that is Cisco. I will talk later about the dividend increase of Cisco, but first why I think it is misunderstood. If I look at the comment section on Seeking Alpha after the latest dividend increase, there is a lot of talk about the revenue being flat and yada yada yada. But Cisco is a company in transformation. They are transforming their business model to receive more recurring revenue from subscriptions instead of one-time license fees. As an employee of a company who's going through those same steps, I can tell you, this takes time. So my focus with Cisco is not so much on the increase in sales at this point, but more on the progress towards becoming a subscription-based company. And with that lens, we can see that in their 2020 annual report, they stated that 73% of their software revenue is coming from subscriptions. Now, let's talk about the purchases I made in February. In February itself, I did not make any purchases. But on the 1st of March I started positions in Visa with 1 share, PepsiCo with 2 shares. On top of that I also bought 2 extra shares of CVS to bring my cost basis down a little bit. The 2 new positions are strategic purchases for different reasons. I don't really like where Visa is trading at currently compared to its fair value point, and that is also why I just bought 1 share. I do like Visa as a company and I think its long-term future looks bright. So the plan with Visa is to expand on this position as soon as it drops again. I also bought Visa to bring up my average portfolio dividend growth rate. Of course it won't do wonders for my current dividend yield, but that is the balance of dividend growth investing for me. Pepsi is, I think, a solid company and I picked it over Coca-Cola because of its diversity and better recent dividend growth rates. In my opinion, as you also could have seen in a comparison video I made with Coca-Cola, Pepsi is also better valued. You can watch that video in episode 52, which is now suggested in the top right corner. At the end of the video I will show you how much the portfolio is worth now and how much each position has increased based on the cost basis. For now, time for the dividends. February is always a nice month for dividends. It is the highest month in the quarter and in this month multiple companies usually announce dividend increases. This February is no different. In February I was paid by these 5 companies. CVS Health paid me $12.60 for my 30 shares. General Dynamics paid me $4.14 for my 4.4 shares. Omega Healthcare Investors paid me $37.59 for my 66 shares. Tensure Factory Outlets paid me $8.45 for my 56 shares. And Williams-Sonoma paid me $4.24 for my 8 shares. All of this for a total of $67. That is pretty exciting because with that $67 I was almost able to buy a full share of CVS Health. And that extra share of CVS will spit out $2 extra per year for me, which will also be put to use again to purchase new shares. Compounding at work, people. As you can see in the year-over-year dividend graph, the 67 in dividends received is a decrease of almost 5% compared to 2020, which has all to do with SKT cutting its dividend last year. Even more exciting is that several companies have announced dividend increases this month. I'll start with the lowest and end with the highest dividend increase. 3M increased their dividends by 1%. This was my first dividend increase from 3M. I obviously hoped for more, but I will take it. Cisco increased their dividend by 2.8%. In light of the transforming company, I don't mind a 2.8% increase, though this should ramp up in the coming years. Northwestern Corporation increased their dividends by 3.3%. As a utility, this is exactly the kind of raises I expect, so all good here. And then T. Rowe Price. I have touted their dividend increases many times already, but they increased their dividends with 20% again. That brings my yield on cost up to 6.1%, which is amazing. Obviously the 20% increase skews it a bit, but the average dividend increase rate with these 4 increases is 6.8%. Hi there, I'm Tom from the Dividend Attitude Show. On this channel I make videos about dividend stocks, whether it be dividend stock battles or dividend stock analysis on an individual company. And once a month, to track my progress and be transparent, I show an update of my portfolio, just like this one. Getting back to the purchases I made at the beginning of March, this will bring my total annualized dividends way over the $500 mark, and it now stands at $516. Since the update of January, it increased almost $20 again. Since my goal is passive income, the $516 in annual dividends would give me 12.9 hours of free time or gifted working time, based on 40 per hour. And if this were a day job, how much money would I get paid per month, day and hour? I would now be paid $43 per month on average, based on 30 days. I would make $1.43 per day, and per hour based on 24 hours I would be paid 6 cents per hour, day and night. My lofty goal for the year is to reach 1200 in dividends, or 100 per month. With a total of 80 received this year, I'm at 6.7% of the way there, so I definitely need to ramp up my buying schedule. And the end game is to reach 30,000 in annual dividends. Still far away, but nonetheless I'm now at 1.72% of the way there. A 0.06 increase since the last update. I think I will open up a drink now to celebrate. After the next part I will show you the total progress this month. Now let's talk about future purchases first. The way forward is going to depend a bit on how my latest additions, Pepsi and Visa, will perform. For Visa I want to buy more when it is around or below the $200 mark. For Pepsi, I'm happy to buy more around this $100 level. Priority is to build up these positions. If that is not the case, then I will likely buy more in the healthcare sector, since there are quite some undervalued stocks there right now. And then the part you probably have been waiting for, total performance for the month. I will exclude the new purchases here, so the cost is unchanged since last month. What has changed a little bit is that the value is at $13,619 now. Meaning almost 30% gains excluding dividends and just shy of 40% including dividends. For those of you who have watched the portfolio update of January, that is about the same amount as January, due to the timing of my purchases and apparently a flat month performance-wise. But in the meantime we were able to collect $68 more in dividends, and that is the power of dividend investing. If you want to learn more about dividend investing, you can watch stock battles between stocks if you click on the playlist in the bottom right. If you would like to see my portfolio progress over time, then click on the portfolio playlist in the top right. YouTube thinks you will like the video in the top left. Until next time, bye bye.